Hello kind people of YouTube, and welcome back to another crypto news, update, discussion, whatever you want to call it video. Today we have a lot of stuff to get to, so let's just get it started with a quick look at the markets. We see the markets for the second day in a row retreating. This is very much a continuation of what we saw yesterday, with the market cap now at 213.2 billion. If you remember, if you watched my video yesterday, it was about 215 billion when I made that. 24-hour trading volume still at about 13 billion, almost 14 billion, and Bitcoin dominance 52.2%, pretty much the exact level from yesterday. We see pretty much everything with the exception of Stellar Lumens in the top 10 going down, but generally not by much, by 1 to 3%, with Bitcoin losing the least out of the top 10. And who is the biggest loser here? Appears to be Cardano. But as you can see here, none of those are major losses. And pretty much every major coin is still at a significantly higher value than before the prices shot up a couple days ago, though it is getting back to that level now. Let's start actually looking at the news. And we have Coinbase now finally adding Brave's Basic Attention Token, or BAT, to their core trading platform. If you remember, a couple days ago, BAT was added to Coinbase Pro. As a result, we saw a lot of movement in the BAT price. It jumped from number 42 on CoinMarketCap by market cap to number 30, briefly jumped into the 20s, now is back at number 30 again. Let's read this article, shall we? All the articles, as always, will be linked in the description if you want to read them yourself. Crypto exchange Coinbase is adding web browser Brave's Basic Attention Token to its retail trading platform less than a week after listing it on Coinbase Pro. The exchange announced on Thursday that customers would be able to buy, sell, trade, or otherwise transact with the token on Coinbase.com, as well as its Android and iOS apps. Coinbase first said it was supporting the token on its professional trader platform on Friday, making BAT the second ERC20 token to be listed by the company after 0x. If you remember, 0x was listed a couple of weeks ago. We talked about that on this channel as well. That being said, not all customers can trade the token at press time. The exchange noted that BAT will be available for customers in most jurisdictions, but will not initially be available for residents of the state of New York. Coinbase Pro customers in the Empire State are similarly unable to trade BAT just yet. The price of BAT saw an immediate reaction from the market upon official word of its listing on Coinbase, including a 5% jump in price in just a few minutes to reach 39 cents, its highest price since July 24th. The spike was backed by $15 million of volume in a 15-minute span on the Binance exchange alone. Profit taking quickly ensued after the initial boost, and the current trading hour is recording a loss of 8% from the initial high. That loss has continued, and BAT is now sitting at, I believe, a 15% loss. If we take a look here, a 16% loss has undone its gains from the last couple days, but not the initial gains from when it was announced that it would be listed on Coinbase at all. We see more and more mining firms make bigger and bigger profits, which of course is representative of the entire crypto sphere. Today in the news, Canadian Bitcoin mining firm Hut 8 with record high revenue in Q3. Canadian Bitcoin mining company Hut 8 has reported record revenue in the third quarter of 2018, according to the company's quarterly financial report published on November 8th. Hut 8, which claims to be the largest public crypto mining company by operating capacity and market cap, has revealed its financial results for Q3 of this year, stating that its revenue reached a record high $13.5 million for Q3 and $27.7 million for the 9 months ending on September 30th. Revenue increased by 126% compared to the previous quarter revenue of $5.9 million. Hut 8 attributed the increase to its deployment of 16 Bitfury block boxes in September at its mining facility in the city of Medicine Hat for an aggregate of 56 block boxes at that site. Each block box contains 176 mining servers and reportedly has a hash rate of 13.7 petahashes per second. In Q3, Hut 8's cost for mining a single Bitcoin was $3,394, which is lower than the current market price of around $6,400, which is reflected in the report as the company's mining profit for Q3 was $6.6 million with a mining profit margin of 51%. Hut 8 claims that this makes it one of the lowest cost Bitcoin mining companies globally. Hut 8's mining profit margin and adjusted earnings before interest, taxes, depreciation and amortization was lower during Q3 for a few reasons. The Bitcoin price significantly appreciated through the quarter, while competition from other Bitcoin miners increased. Another factor was the record high temperatures in Alberta, which resulted in increased electricity costs at Hut 8's Drumheller facility. The company expects that the efficiency of application-specific integrated circuit chips used to mine cryptocurrencies will rise during the colder months, which subsequently will improve performance in the next quarter. Hut 8 launched its Medicine Hat facility in July in partnership with Bitcoin mining equipment manufacturer Bitfury. At that time, Hut 8 had mined around 1,000 Bitcoin since its launch in December of last year. Meanwhile, BTCC Pool, the mining operation of Hong Kong-based cryptocurrency exchange BTCC, announced it will close indefinitely at the end of November due to unknown business adjustments. BTCC nonetheless expressed a sense of optimism, hinting that the decision to close down was not strictly permanent. This is something we have seen a lot in the last couple months, and we've gotten frequent reports about Q3 in particular. A lot of mining facilities have made spectacular profits despite the Bitcoin price being at a third of what it was at the beginning of this year and of last year, and despite mining costs increasing over time. Now, mining has become slightly more efficient because these larger firms have figured out where to get the cheapest electricity, where to have the cheapest venues, where the taxes are the lowest. So they've managed to cut the price down a bit, even with the actual electricity cost of mining itself not falling, with mining difficulty only going up. And we see this a lot. We see a lot of profits being made in Bitcoin mining. It remains to be seen how long this will continue, with mining difficulty set to continue rising in the next couple of years. The Bitcoin price will have to increase significantly for it to remain profitable. Now, this company managed to mine at $3,600 per Bitcoin. That is only going to get more expensive in the next couple months and years. And if the Bitcoin price doesn't keep up with that, it will become a serious issue for mining firms. Right now, a lot of them are doing well and are even expanding, as we can see here with them buying more equipment and opening new plants. But we also see other ones closing or limiting their activities or switching over to other coins. Continuing on, we have someone showering Ethereum in praise, and that is not just anyone but a former Google chairman. Cryptocurrencies and blockchain technologies have received the support of many influential people in the world of finance and technology, despite the current bearish crisis that markets have suffered during 2018. One of the latest personalities to join the list of those attracted to this type of technology is Eric Schmidt, the multimillionaire former president of Google, who remarked in an interview that Ethereum is so powerful that it could be the beginning of a technological revolution that changes the way modern society does business. Speaking in a podcast hosted by famous economist Tyler Cowen, Schmidt shared his impressions regarding an extensive repertoire of topics. However, when talking about blockchain technologies, his intervention, though brief, was quite optimistic. Tyler asked Schmidt for his opinion on the various technologies. Schmidt had to say whether they are overvalued or undervalued. When it was his turn to talk about the blockchain, Schmidt said, "In the public format it is overrated, in its technical use it is underrated." This view has been shared by an important number of investors who recognize the value of technologies but criticize the miraculous conception that many have of blockchain technologies, which I can personally very much get behind. Now, blockchain is very, very promising technology, and there are a million possible use cases, and especially if we can get it to scale to the degree where we need it to, it can be a real, it can really change the paradigm of how we currently do stuff. But it's not the one-size-fits-all solution to every problem that we face, and it's not miraculous. There are some applications for which blockchain makes sense. There are some for which it doesn't make sense. There are some for which it does more or does less. And a lot of people are seeing this, but a lot of people also think that blockchain is kind of this magical bullet that will solve everything. It isn't quite that. Schmidt is of the group that believes that although the public tends to overestimate the current influence of technologies, actually they are full of potential. He went on to explain that blockchain currently has fascinating uses in the financial sphere. However, he was essentially empathetic in highlighting the potential of Ethereum as the most obvious example of what blockchain technologies can achieve. And his actual quote here: "Blockchain is a great platform for private banking transactions where people don't trust each other. I think the most interesting stuff that's going on are the beginning of execution on top of blockchain, the most obvious example being the capability of Ethereum. If Ethereum can manage to figure out a way to do global synchronization of that activity, that's a pretty powerful platform. That's a really new invention. According to a transcript of a conversation available on WikiLeaks, Mr. Schmidt learned about Bitcoin from a conversation with Julian Assange in 2011. The complete video of the conversation is available below, so if you guys want to watch that, it is here. I have to admit I have not listened to the entire interview, but I trust that this quote is word for word, and that is the important part here. Now, he does seem to be talking more about blockchain in general than Ethereum in particular. He seems to pretty much be grabbing for Ethereum as the most obvious example because it's the highest scale cryptocurrency that is of a newer generation, that isn't just using the basic technology that Bitcoin is using. As that, if you want to talk about the potential of blockchains that have smart contracts, that can run dApps, that are scalable, that have a lot of possibilities, of opportunities on them, then it makes sense to go for Ethereum and to talk about that, and that is what he's doing here, which is just the latest in a line of really influential people in the tech and finance world, millionaires, billionaires who have worked with major companies, who have led major companies, all saying stuff like this. You have to keep in mind, if these people see the possibilities here, if they see the opportunity, if they see the future potential, that means huge companies are secretly working on implementing all of this already. Now, of course, it's always going to take a while until like a Google or Apple openly talks about using a kind of technology. They generally wait until they have actually developed a kind of product on top of it, and that can take years from when they start tinkering with something. But every time we see like former CEOs, former chairpeople of major companies talking about stuff like that, that means you can be almost certain these huge companies are all working on implementing these technologies. And an article from Coindesk here. Crypto exchanges must grow or die, says an executive at fintech firm Cinnabar. And we've seen a lot of criticism of crypto exchanges, and this kind of ties into that. A financial technology company that was founded a full decade before the Bitcoin white paper came out is looking to help today's cryptocurrency trading platforms mature. Cinnabar, based in Stockholm, mainly provides tech solutions to traditional stock and commodity exchanges around the world. But this year it struck a handful of deals with crypto startups, most recently the Bitstamp exchange, which announced this week it will be the first in the space to use the vendor's Trade Express platform, alongside the likes of the London Metal Exchange. And it likely won't be the last crypto exchange to do so. Cinnabar says it's looking for other potential partners in the market and sees around a dozen that would fit its criteria for selection, the biggest trading volumes, and an effort to gear up for serving institutional investors. The most suitable ones are those who are looking to participate in the transformation that the industry is going through, Eric Wall, Cinnabar's cryptocurrency and blockchain lead, told Coindesk. We can serve retail-only focused cryptocurrency exchanges, but the ideal customer for us is the one that is looking to cater more heavily to institutional investors. Getting institutional investors as clients will become crucial for cryptocurrency exchanges to survive, Wall believes, and it will require significant adjustments. He added, cryptocurrency exchanges currently are extremely immature from the traditional financial markets perspective. Many of them lack basic knowledge of how to operate robust and reliable financial markets. This is the point here. This is the point. A lot of the crypto exchanges that have been popping up are very much amateur operations. Some of them are not even, or actually a lot of them are not actually living up to the legal requirements of platforms like it. And a lot of them will need to do better. There's an added issue in the crypto world that a lot of times there's a lot of animosity towards anything working with a government, especially the US government. Unfortunately, there are legal frameworks in place, and they will likely be stricter in the future for crypto, where among other things, to ensure no money laundering, that there needs to be some level of cooperation, some level of informational exchange. In the crypto world, of course, cryptocurrency is seen as a tool for decentralization, of anonymization, of personal freedom. It is harder for any platform to implement those things because they always come with a backlash from the community. What we as the community have to keep in mind is that, first of all, a lot of them legally either have to do it now or will have to do it in the future. And if they want to reach a larger audience, most importantly institutional and traditional money, they will have to do these things at one point or another. They're not choosing to stab the ideas of crypto in the back. They're just trying to grow their company, and they might even legally have to do it to continue existing. In particular, to attract institutional investors, crypto exchanges should provide the same functionality as traditional stock and commodity exchanges do, Wall says, including trade compression, netting and clearing, so that cryptocurrencies can be traded like a typical financial asset. Typically, crypto exchanges operate on pre-funded basis, only allowing users to trade as much as they have on their accounts, while traditional financial exchanges use clear trades when customers maintain collateral deposited with a clearinghouse, and the outstanding trades are settled at the end of a trading cycle. Right now, the cryptocurrency exchange market is very inefficient as there are no clearing technologies and clearinghouses in the place, Wall explained. We can help a cryptocurrency exchange become a real exchange that has a clearing module so trading is more efficient for institutional investors. This is what Cinnabar is going to help Bitstamp with. To start, it will replace the exchange's matching engine, but in a later phase we are looking to help Bitstamp to fit into the market structure that institutional traders expect and require, Wall said. In particular, Cinnabar will allow Bitstamp to become a de facto clearinghouse for its own trades. And this is pretty much all we have to read here. The article continues on and it is linked in the description, of course, if you want to read it. The takeaway from here is that a lot of us, if we don't come from the traditional finance world, don't really think of this, don't really notice this. But there are certain expectations of a trading platform from the perspective of traditional finance, of fintech, of traditional investors, of institutional investors. They expect a certain tool set to be available, they expect a certain level of professionality, and they expect a certain level of legal compliance. And only once all of those are reached, and almost every crypto exchange is lacking in at least one of them, only when all of those are reached will we see a lot of institutional money flowing through exchanges. Now what we see instead is that a lot of traditional finance companies are offering other financial products tied to cryptocurrency in some way, rather than having its investors invest directly through an exchange. That is partially a result of crypto exchanges just not being mature, not having the capacities that are expected of them. And the last story for today, Swift denies rumor it will join Ripple's blockchain network. Now, if you've been following Ripple and XRP at all, you know there have been a lot of rumors online that Swift may be working with Ripple in some capacity, with some people even thinking that Swift had already integrated Ripple's technologies fully into its international transfer system. Now, that is not the case, and we finally have a clear statement from Swift about that. Speculation that RippleNet and the Society for Worldwide Interbank Financial Telecommunication, SWIFT, were planning to integrate may have caused the market cap of Ripple to briefly, or XRP rather, to briefly overtake that of Ethereum to take the second position in the overall crypto market. This was based on the belief that with the integration, RippleNet, an enterprise blockchain which does not use XRP, would serve as a gateway to convincing SWIFT members to adopt XRP-integrated Ripple products like XRapid in the future. Now first of all, this is wrong. This is simply incorrect. We see this when a lot of times when these articles are talking about Ripple and about XRP. First of all, there is very little reason to believe that the recent price movement we have seen in XRP has anything to do with Swift rumors. These rumors have been around long before the prices started going up, and the price can much more closely be correlated to other movements in the space. But additionally here, RippleNet, an enterprise blockchain which does not use XRP, that is simply not what RippleNet is. RippleNet is a whole suite of products that include ones that use the XRP token. So, I don't know where they get this characterization from. Fueling the rumor was the fact that Swift had announced that beginning in November, its new standard in cross-border money transfer, Swift Global Payments Innovation, would be upgraded with the GPI tracker being extended to all payment messages for 11,000 banks on the network across 200 countries. With this upgrade, the rumor went about 4,000 banks could now get access to Ripple products. However, these rumors have been dismissed by Swift according to finance magnates. Though its public relations firm, the bank-owned payment network that was founded more than 4 decades ago, denied that the upgrade had anything to do with RippleNet. I'm not sure where those rumors are coming from, but the upcoming standards release is entirely unrelated to RippleNet. Possibly also contributing to the speculation are some developments which have taken place in the last couple of years. In April of last year, for instance, Ripple hired a former Swift executive who was responsible for selling its GPI offerings, Marjan Delatin, I probably mispronounced that, very sorry, as its sales director for Europe. Now, once again, this is the kind of stuff that the internet will endlessly make rumors of, but that don't have to mean anything. Now, Ripple hiring a former Swift executive, that doesn't have to mean they're in any way working with Swift. Rather, that means they want someone with the expertise of having worked at Swift, because Swift is one of their biggest competitions, if not their largest competition. So if you can hire a former executive from that to work for you, that is positive development in so many different ways. Doesn't have to mean in any way that you're working with the company. And here we see a tweet from Swift announcing their new system. Had the speculation been true, such a partnership could potentially have seen Swift greatly benefit from the RippleNet, especially with regards to transaction speeds. While RippleNet claims it can route payments efficiently and leverage instant settlement to transact in seconds, Swift says that even with the upgrade, only 50% of the payments are credited in under half an hour, and Swift thinks that this is worth bragging about. Prior to the brief flippening earlier this week, the market cap of XRP had overtaken Ethereum's a couple times this year, as CCN had previously reported. And this should already have given us pause. Anyone who was wondering if they might be working with RippleNet, with Ripple, they would not be advertising payments in under 30 minutes. They would be advertising payments in seconds. But yeah, we see here the internet was just running wild with rumors that we had very little reason to believe. But what really annoys me here is this article claiming essentially that all the price development of the XRP token was only due to this rumor, when there have been so many pieces of good news around Ripple and around XRP coming out the last couple of weeks. You can't spend a day without Ripple gaining a new partner, without some company talking about how great XRapid is, how great the XRP token is, without a ratings firm talking about how XRP is one of the few cryptocurrencies that you should be investing in. There is good news coming out every single day, so to claim or to imply here that all the price movement from the last couple of weeks, the very beautiful price movement that XRP has gone through, is due to this rumor only, that is quite ridiculous. Especially since most established, experienced traders and investors didn't buy into this rumor either way. Now, it is possible that, of course, it will always be possible that Swift is in some capacity working with or discussing with Ripple that they might work in the future. But at least right now, they are fully saying this project is unrelated. Now, it doesn't mean that they aren't planning to, in some capacity, integrate Ripple in the future. But the idea that GPI is Ripple-based, there was very little reason to believe that. What it always seemed like to me is that this was Swift recognizing that they now have competition from the blockchain space, specifically with XRP and to a lesser degree from Stellar, and they had to develop their own solution, and that was GPI. Of course, their own solution is still significantly worse in every way that matters, but that is why they are competition. But yeah, with this I'm gonna end today's video. As you have noticed, probably if you watch my former videos, I have changed the visual format of my videos. Now, I personally like the other way more, but I know some of you have been asking me to do this. There are some reasons why I use the other one that simply made my workflow significantly easier, but if you guys prefer this, I'm just gonna do this instead. I hope it all worked out, because I can't see if it's actually recording right now. I'm kind of scared that it isn't recording. But thanks so much for watching. I upload these videos every single day, these news updates videos. So if you want to get them to your subscription box, make sure to subscribe. All the articles are linked in the description, and you will also find my social media links there. Thanks for watching.